Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Vishnu, Head of Economics and Strategy at Mizuho Bank, coming in from Singapore. Hi Vishnu, good to have you on the show.
Always good to be here, Brian. Thanks for having me.
Now, Vishnu, before we get your insights, let's take a quick look at how crypto markets are performing, and then we'll take a look at how regional markets are performing. We'll start with Bitcoin, which is at 56,495.8. It's up 1.14%. Ethereum is at 3,523.24. It's down 1.34%. Now, if we look across to regional markets, the Nikkei is at 28,480.39, up sharply 1.54%. Shanghai Composite is at 3,605.76. It's up 0.38%. The Hang Seng is up sharply at 2.23% at 25,391.37. The ASX 200 bucks the trend. It's down 0.39% at 7,291.2. The Kospi is also in negative territory. It's at 2,956.3. It's down 0.11%. Closer to home, we've got the FBM KLCI, which is up 0.59% at 1,573.15. And rounding up the numbers, we've got the Straits Times Index, which is at 3,116.24. It's up 0.11%. Now, Vishnu, what's your view on how markets have performed this morning?
I think markets are a little bit of a mixed bag. And really the dilemma for markets right now is deciding whether they are in a sweet spot or the so-called Goldilocks market, or they're waiting for widespread tarnish to rock markets. And on one hand, we've got that dilemma within the US non-farm payroll numbers that came out on Friday.
Yeah, and that was quite a big miss. We've got a number that was 194 versus expectations of 500.
You're right. You're spot on. It was such a miss. But markets suddenly decided, hang on, it doesn't really matter. And here's why. When they dug into the numbers, they realized that there were substantial upward revisions to the previous 2 months. So that means that the underlying trend hasn't been as weak as expected, or at least stronger than expected. And when they dug further into the numbers, the more important part is that a lot of the losses was from the public sector, particularly the states which were not hiring as quickly, whereas private sector payrolls remain strong. So I think that's what drove markets up. And the last point is wages. Wage gains continue to be strong, and so markets decide it's Goldilocks enough to carry on with taper.
Now, so this is then that whole expectation of taper, is that sooner rather than later now?
Absolutely, because I think markets now are in the mindset that they are okay with taper, because I think they fundamentally believe the Fed will not rock the boat, but rather steer it towards an exit. Whereas if the Fed was suddenly to get cold feet, markets may then shut themselves off in a self-reinforcing fear and self-validating fear that things are turning out to be much worse than anticipated.
Now, I want to swing over to China. We've just had earlier this morning, Meituan slapped with a $500 million fine, yet tech stocks in China have rallied. Tell us about that and how that plays into the overall climate of risks surrounding China.
I was so glad you wanted to swing on to China. I was on the vine with you even before you realized it. So, I think that's the other part of the China story. And here I cannot emphasize enough, the kind of stark differences that you get depending on which angle you take on China. So you're right, there continues to be regulatory sector risks, so on and so forth. But at the same time, I think markets are taking some consolation from the fact that it appears that the PBOC is keeping liquidity really flush because they don't want any mishaps in the market. And the other one being, whilst they continue to look at this from an angle of not having any risks from monopolistic behavior, so on and so forth, there's also a realization that China would want to keep growth chugging along. So the side bets now are that China will ease up. Having said all of that, I think the biggest sector to watch now is the property sector, where we continue to see shudders in the credit markets related to property. And here, I think this is what will be the defining moment, because we'll have to find out whether the policymakers can adequately backstop the worst of fears while sticking to their guns about not encouraging moral hazards, and that's really targeted at Evergrande at the moment. So this is the fine line, and this may be why the markets are in a very mixed mode, with North Asia not getting very comfortable with some aspects of China, whereas the rest may be taking some consolation from fairly buoyant commodities and a not dismal mood in the US.
But Vishnu, what the underlying fear is also the fear of a sharp correction, a hard landing in China, and then the contagion that will take place not only across Southeast Asia but globally, hitting the anticipated global growth story hard.
I think for sure, and one of the things about that's going to be a very disruptive contagion effect, because I think the consensus is there continues to be this belief that whether we're talking about Evergrande or some other large Chinese corporate, it's not large enough to be a so-called quote-unquote Lehman moment. So the West appears to be now buffered better. But within the region, I think the realization, and quite rightly so, is that we cannot be divorced from China risks, given it's not just supply chain linkages, but very deep financial linkages as well. And I think that's really the thing that markets are watching quite cautiously. So I think even moments of optimism will be lined with a little bit of caution.
So Vishnu, it's earnings seasons up in the US this week. I think the banks are going to be starting to call their earnings. What are the key events and data points you're looking for this week that will move markets?
But I think this week, in terms of the macro data, the things that we are looking for are, after the US non-farm payroll numbers, we're looking at the CPI numbers to see how markets want to calibrate their thoughts on taper or anything else to do with the Fed. And on the very same day, just hours after, you get the FOMC minutes. And so they'll really be tearing that apart for any clues on the timing of taper, so on and so forth. So those are the big things to watch in terms of the data out of the US. In the region, Singapore will be having its Q3 GDP flash coincident to the MAS meeting. So whether the MAS restores appreciation bias in the Singapore dollar, which is indicative of what it thinks of the prospects going forward in the next 6 months, wanting to be ahead of the curve, that would be a bit of a barometer to watch. BOK is also meeting. I think markets may be nervous about whether BOK may or may not hike again, given the inflationary pressures. The big takeaway for all of us, though, is heading into the earnings season, we want to see whether the rising costs start to get in the way of hopes about profits.
And that's a story that will continue to unfold with all these concerns about inflation. Vishnu, thank you very much for coming on the show.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please subscribe and like to our various social media platforms. Thanks again for tuning in.